new federal rule is going to make it more expensive to buy a home, not because you make more money, but simply if you have good credit. Comes at a time when mortgage rates are already above 6%.
Yeah, you just heard that correctly. Believe it or not, a new rule that was decided unilaterally by the Biden administration penalizes home buyers who have higher credit scores and pay larger down payments. The stated objective is allegedly equity in the housing market by charging less risky borrowers higher fees that would theoretically subsidize riskier borrowers who have lower credit scores and smaller down payments. The new policy has to do with something known as loan level price adjustments, or LLPAs, which are imposed by Fannie Mae and Freddie Mac, the two entities that guarantee the vast majority of new mortgages. LLPAs are fees that get tacked onto mortgages, and they vary among borrowers. Traditionally, the fees are calculated based on credit scores and the size of the borrower's down payment. But Biden is changing all of that.
Understand what's going on, you need to familiarize yourself with the term called loan level price adjustments. These were introduced 15 years ago after the mortgage crisis to compensate for the risks of lending money. Basically, this allowed lenders to charge fees based on the likelihood that someone was not going to pay back their loan. Generally, the lower the credit score, the higher the risk the borrower is, and the higher the score, the lower the risk. Seems common sense, right? Well, in January of this year, new changes were put in place that would level the playing field between good credit and bad credit. And starting May 1st, the biggest benefits would go to those with bad credit. Of course, this inevitably winds up getting spun around as Biden redistributing high-risk loan costs to homeowners with good credit, which is kind of true, but it's not the entire picture. Just to show you a before and after, if you have a 640 credit score and put 25% down, you'd previously have to pay a fee of 2.75%. Now that same borrower will only have to pay a 1.5% fee. On the other hand, if you have a 750 credit score and put 25% down, you used to be charged a 0.25% fee, and now you're gonna have to pay a 0.375% fee unless your credit score is above 780, in which case everything stays the same.
Yeah, that sounds like a regressive tax that punishes people with good credit, and I just don't get it. So to recap, under the old traditional lending model, home buyers with high credit scores and larger down payments paid less in fees because someone with good credit is less likely to default on their mortgage. Higher down payments also translate to lower monthly mortgage payments, which reduces the monthly housing costs for the borrower. That also makes it less likely that the borrower will default on the loan. On the other end, borrowers with lower credit ratings and smaller down payments pay higher fees or paid higher fees because they're riskier to lend to. They have a higher likelihood of defaulting on the loan, and lenders charge those higher fees to those borrowers to essentially hedge their bet. But under Biden's new rules, that all changes. And I think it's critical to give you some specific examples of just how costly this can be for those with good credit. Before we get to that, I'll start with the theoretical good news for people who could benefit from this. According to Mortgage News Daily, the effective penalty for having a credit score under 680 is now smaller than it was. If you have a score of, let's say, 659 and are borrowing 75% of the home's value, you'll pay a fee equal to 1.5% of the loan balance, whereas you'd pay no fee if you had a 780 plus credit score. Before these changes, you would have paid a 2.75% fee. All right, well, let's give you another example. Let's say on a $300,000 home loan, that savings in fees would amount to nearly $4,000, pretty good. But that lower fee is made possible because borrowers with scores ranging from 680 to 780 will see a spike in their mortgage costs. In fact, applicants who saved for a 15 to 20% down payment will experience the biggest increase in fees. Just take a look at this chart to see how things have changed under the new Biden rules, okay? So the green and yellow cells represent the borrowers who will see a decrease in their fees. And just notice how the greenest cells are shown in areas where the buyer has a lower credit score and of course a smaller down payment. Orange and red cells represent where mortgages will be more expensive due to increased fees, meaning those with higher credit scores and bigger down payments. For example, a buyer with a 620 FICO credit score and a 5% down payment gets a 1.75% fee discount. And that's pretty significant. It's a significant decrease from the old fee rate of 3.5% for that bracket. But again, that comes at a price. A home buyer with a 740 FICO score and a 15 to 20% down payment will face a 1% surcharge compared to the old fee of just 0.250%. Now the fees can be front loaded as a lump sum that's included in the closing costs, or the borrower can bake the fees into their monthly mortgage payment throughout the lifetime of their loan. And if you think the fees are negligible, you'd be mistaken. According to David Stevens, who served as Obama's Federal Housing Administration Commissioner, the costs are freaking significant. On the low end, monthly payments will rise by about $40 if the borrower with good credit is purchasing a $400,000 home at a 6% interest rate. By the way, interest rates are above 6% at this point. We're just giving you the 6% interest rate for example's sake. Now, over the lifetime of that loan, the additional cost to subsidize Americans with bad credit amounts to $14,400 for the borrower. Again, that's on the low end of the fee increases. If you live in a big city like Los Angeles, you'd be hard pressed to find a home at $400,000 or even below $750,000. So you'd obviously pay more than $40 a month in fees. So for example, on an $800,000 home, the borrower with good credit would pay nearly $30,000 in additional fees throughout the lifetime of that 30-year fixed mortgage. Look, there are several issues with this new Biden rule. For one, it's being marketed as some sort of tax the rich policy that makes it seem like the new system redistributes wealth from fabulously wealthy tax dodgers in order to make home buying within reach for more Americans. But those with credit scores above 780, for some reason won't be charged additional fees. And do the fee decreases for those with bad credit make all the difference in making housing more affordable? The answer to that is no.
As you can see, borrowers in the middle wind up paying 0.75% more than before, while borrowers in the lowest credit tiers see a marginal savings. Now don't get the wrong idea, because people with bad credit still end up paying more in fees than people with good credit, but people with good credit now get less benefit than they did before, and people with bad credit end up seeing a slight savings. It's kind of like, in really simple terms, if the house is $100, a person with good credit would pay $1 instead of paying 25 cents, and a person with bad credit would pay $2.85 instead of paying $3.25.
Honestly, this just looks like the Biden administration is doing the banking industry a solid by greenlighting more fees under this facade of housing affordability. Even David Stevens, again, the guy who worked for the Obama administration, thinks this is a bad idea and argues that it's unlikely to work in helping people afford homes.
Scott Bolden's here, former chair of the Democratic Party in DC. I get the idea of the campaign promise to get the rich to pay their fair share. But aren't there going to be a lot of folks in the middle class who have just been responsible and have good credit who are going to also be caught up in this?
Yeah, it's like a penalty for good credit and putting a high down payment.
If you want to make it income tested, fine. How are you making it credit score tested? I just don't get it.
By the way, Stevens also says that this confusing approach won't work, and more importantly, couldn't come at a worse time for an industry struggling to get back on its feet after these past 12 months. To do this at the onset of the spring market is almost offensive to the market, consumers, and lenders. He's right. For one, the credit rating metric being used to calculate new fees say little about the income or wealth of those borrowers getting hit hardest by the changes. Look, having a higher credit score doesn't mean that someone's rich. It just means that they manage to pay their bills on time. It also means that they have a decent debt to credit ratio, meaning that their available credit is greater than their outstanding financial liabilities. A borrower with good credit could be a teacher making $60,000 a year who pays off their credit card in full each month. Does that person really need to pay higher mortgage fees to subsidize riskier borrowers? Income isn't even factored into credit scores. As John Yulsheimer, who used to work for FICO and Equifax, notes, income isn't considered in credit scoring systems. Wow, really? So our wages and salaries aren't weighed in at all? Income isn't even on your credit reports, so it cannot be considered in credit scores because credit scores only consider what's on your credit reports. In fact, no wealth metrics are factored into your credit scores. So this really isn't about redistributing wealth from billionaires to the poor. This actually pits working Americans against one another and deepens resentment and division. I think we've had enough of that. By the way, Stevens was also subtly touching on something I'm extremely worried about. The new fee structure encourages underwriters to engage in riskier lending at a time of outrageously inflated housing prices and high interest rates. And I'm old enough to remember the outcome of George W. Bush's administration pushing policies with similar objectives. It culminated in a housing market collapse in 2008. Back in December of 2008, the New York Times blamed Bush's housing policies for the crash. I'm gonna read a few excerpts from their reporting at the time. They wrote that Bush pushed hard to expand home ownership, especially among minority groups, an initiative that dovetailed with both his ambition to expand Republican appeal and the business interests of some of his biggest donors. He insisted that Fannie Mae and Freddie Mac meet ambitious new goals for low-income lending. Concerned that down payments were a barrier, Bush persuaded Congress to spend as much as $200 million a year to help first-time buyers with down payments and closing costs. By the way, Biden isn't even doing that. And he pushed to allow first-time buyers to qualify for government-insured mortgages with no money down. The lenders doled out loans to risky borrowers, packaged up these toxic mortgages into securities that were traded in the stock market, and then proceeded to bet against them because the banks were fully aware of the high likelihood of defaults. Not only did the banks profit from shorting mortgage-backed securities, they also took ownership of foreclosed homes. Now, is Biden setting the stage for a repeat of that mess? Whether wittingly or unwittingly, he's certainly increasing the likelihood. Let's take a look at an example, comparing two mortgages on a $400,000 home with the same 6.5% interest rate in California. These calculations include property taxes, which are actually relatively low in the Golden State. Now, take a look at this graph. The first example, or this screen grab, the first example features a borrower who put 20% down and financed the rest. Because of the larger down payment, this borrower was able to secure a $2,526 monthly payment through a 30-year fixed loan. So now let's compare that with someone who pays a far smaller 5% down payment. If you look at that, their monthly payment is obviously more of a burden because it shoots up more than $500 a month to $3,064, and that's assuming the borrower scored the same interest rate as the person who paid a 20% down payment. And in reality, someone with a lower credit score and smaller down payment would get charged a higher interest rate, meaning that their monthly financial burden would actually be more overwhelming as a result. And however much they didn't contribute toward a down payment would need to be financed. That also benefits banks through interest rates. They would have to pay more in interest as a result of having to finance a larger amount. Now, encouraging lending to riskier borrowers at a time of astronomical home prices and high interest rates increases the chances of another wave of foreclosures. Cash buyers, who tend to be institutional investors, salivate over that type of housing market crash because they get to swoop in and purchase homes at a discount. And while the liberal, pro-Biden, pro-media echo chamber has mostly ignored covering this new rule, I made sure to do the appropriate research and make sure that I got the story right. Right now, the right wing is using this story for their own political purposes. But we shouldn't care about that. What we should care about is how Biden's policies are impacting ordinary people who are already struggling to buy homes.
The unfortunate reality, Becca, is that it really isn't going to be that effective. FHA is still a better rate for those low credit score borrowers. So we're going through this set of steps, and all it's going to end up doing is raising costs to a bunch of borrowers who are sort of traditional GSE borrowers. But the FHA will still be a cheaper rate for a borrower with a credit score below 700 and a very low down payment. So it really accomplishes little other than really disrupting a tradition around risk-based pricing that Fannie and Freddie have been committed to ever since their inception.
And look, I don't get any of this either, right? Because it's not about looking at income, it's not about looking at wealth. Biden made a decision to focus on credit scores, again, that does not at all factor income. Biden has done nothing to make the price of housing more affordable. Low supply is a huge reason why homes are expensive. Biden hasn't adequately addressed that at all. And while we haven't built more housing to drive down the costs of homes, Biden also hasn't improved economic conditions like wages that would make home buying easier for Americans. You know, maybe addressing root causes rather than implementing regressive fees is a better approach. Biden hasn't done a damn thing to regulate, or in my opinion, he should ban institutional or foreign investors from snatching up the limited supply of homes on the market, which again also drives up prices. But I don't know, maybe that's the point. He's not only pitting middle class and working class Americans against each other. Considering the burdensome cost of owning a home, he's also setting risky borrowers up for failure. And I don't understand why he wants to do this. Now, I think there's a reason why liberal corporate media has stayed away from this story. It's not exactly politically beneficial to tell people who worked really hard to keep their credit scores up that they will be punished for that in order to subsidize the loans of riskier borrowers. The right wing uses it for political purposes, but I'm sharing the facts with you because this is exactly what mainstream Democrats do whenever there is a crisis having to do with the economy. There's like a little bit of change around the edges. They market the change as if it's going to benefit low-income individuals or minorities who have been locked out of the housing market. But at the end of the day, they don't actually do that at all. Even if the people who stand to benefit from this policy see a slight decrease in the fees that they have to pay for their mortgages are still gonna be super expensive because housing is super expensive. We need to do something about that. And the resentment that this is gonna lead to isn't exactly helpful in the country, especially with the climate that we're currently dealing with, the anger that Americans are facing. This is just more fodder for the destructive and divisive rhetoric that we hear from the right wing. Why would the Biden administration give that to them? You want to make housing affordable, then make housing affordable. Don't punish people who, despite all of the challenges that we're facing in this economy, manage to keep their credit scores up. Just because you got a good credit score doesn't mean you're rich. And I don't think those people should be punished with paying higher fees.
Thanks for watching The Young Turks, really appreciate it. Another way to show support is through YouTube memberships. You'll get to interact with us more. There's live chat emojis, badges. You've got emojis of me, Anna, John, JR. So those are super fun. But you also get playback of our exclusive member-only shows and specials right after they air. So all of that, all you gotta do is click that join button right underneath the video. Thank you.